Welcome to another episode of Blockrevision, and yesterday's episode I decided to divide into two pieces and broadcast it in two episodes as I found the knowledge I wanted to include inside of them has been quite extended. So today I will broadcast two episodes, one after another, and the first one will describe the situation of Japanese economy, and the next one will be Canadian. And today in the second episode there will be Australia, Switzerland, and also New Zealand. So let's go ahead. Alright, so in Japan, I'm collecting data of a previous month. There was on Wednesday, 27th of April, a BOJ interest rate decision, and right now we can observe that we are still in this negative territory. That's the situation that may get quite anxious. Society, also the citizens of Japan, right now it's one of the not many economies around the globe where the interest rate is unchanged for so a long time. So literally we've seen quite of a interest rate hike back in 2008, but it looks like the Japanese government want to save the economy first and foremost, but it doesn't look as good for the citizens that have to pay higher prices for lots of things. For instance, inflation rate, let's have a look at this one, is really getting out over control. And in terms of the maximum spread, we can find that we are not maybe anywhere between 70s and 80s, where the inflation rate was really outstanding, but the Japanese market right now is struggling with nearly 3% year-over-year consumer prices rise right now. So it should worry lots of economists and make us ponder about where these Japanese things are going. But definitely there is not very easy to tackle right now. Okay, so there was two of the first two gauges that didn't make us very much optimistic around the country's situation. Right now, let's have a look at consumer confidence, and it also is really heading into customers. Right now we can find that this gauge has dropped from around 39 levels, and we are right now heading back into low 30s area. Regarding the whole spectrum registered since early 80s, we can find that we are right now in one of the worst consumer confidence level ever been seen. There was three times in the past where those gauges been either equal or lower, and that was during the global financial crisis. There was during this time of possibility of European Union breakout, and right there during pandemic crash. So there is also quite something that may prompt the economists to push and the Japanese government to fight with this in any way. Right over there we have GDP growth rate, and that was a bit slower. Right now we are balancing around neutral territory, so we can find that we have fallen recently to minus 0.2% quarter over quarter in first quarter of 2022, and compared with market consensus of a 0.4%, we can find that that was quite of an unexpected turn of events. So that's something also that may be problematic in the future, and something we need to observe regarding where the economy is heading to. And as of last from 18th of May, we could find that Japan balance of trade is pointing us that we are jumping from this very low level of January's much of a bigger deficit, one of the biggest deficits from the date this gauge been firstly noted. And right now we are just trying to get over this one, and right over this period of time the balance of trade looks like is getting better, so it should forecast some optimism for the future, but we still observe a trade shortfall that may impact the rating. Right now let's have a look at the Japanese yen futures. Let's talk about what chart is telling us. So right now we are on a nearly historically low levels. There was only one period of time of 2002, right after global financial crisis, where Japanese yen was really lower. So right now we can observe that right after this slump we may observe some of a rebound that we are observing right here, but chef of a Japanese central bank is right now not see any substantial interest rate hike, so it means the currency should weaken even further if no hawkish pivot will be turned. So right now we can find that we are right now balancing around 0.0078 points, and the next substantial resistance will be seen at 79.8 points, and that will be something where I would observe this Japanese yen futures index to revert once again, and will start balancing around those area, or even get lower back to 2002's level. So right now there is quite of an oversold market, but there is no substantial premise that it should move higher. Right now the volume is a little bit getting accelerated, but it's still not anything close to where we should assume it's already bottom. So we should observe quite of an substantial volume. Right now investors are not really interested in Japanese yen futures, so it means there is a probably more weeks on this market ahead. And right now let's have a look at Canadian state of economy. Right now taking data from also previous month, and on 4th of May we've seen a balance of trade. So a balance of trade right now is pointing that Canada is in a relatively good position. Canadian market is quite correlated with also oil, as Canada is also a large exporter of crude oil around the globe. So right now we can find that this balance of trade has spiked. This means we are right now getting back to quite of an optimistic area where been seen right before the 2008 period of crisis. So we can find that with this interest in some of the Canadian products, we can find that we still should stay move forward in terms of this gauge. Right now let's have a look at unemployment rate, and this one is showing us that we are heading back to normal. We have even improved this rating regarding where those pre-pandemic levels were. So it means there is quite of a optimistic scenario for Canadian market. Right now we can find that employment levels are getting steady in those sectors as goods and services producing industries, and also there are some other spaces that also getting an improved outcome. So that's also add up to the strength of Canadian economy. IV PMI index looking like right now we are just approaching 70-ish area, so it means that there are some things that complicate the issues of purchasing managers index, and right now those gauges are based on supply delivery times that been lengthened, and firms that expanded their inventories of stocks at a slower pace. So right now there are the only one things of the most important aspects of Canadian economy that may add up to a possible first signs of a crisis, but these are just not very troublesome. However, inflation rate still is very high. Right now we can find that those levels haven't been seen since 80s, and right now we are struggling with a 6.8 percent point. There might be a quite of a first sign of a peaking, because those gauges don't differentiate so much from each other. So the March and April's gauges may point that there might be a peak in the first half of a year, but it's still too early to say that. So the most important components that add up to the problems of Canadian inflation rate are that food prices surged amid higher costs for inputs such as fertilizers. So those problems stems from Russian invasion of Ukraine, and right now also the pressure prices of energy and commodities add up to complication of this rating. Okay, so let's have a look at Canadian dollar futures. We can observe that we have leveled this 2017 level. Right now we can find that we are consolidating around this area of 0.76 and around 0.80s. So right now we can find that there was an attempt of heading back towards those 80ish area, but been stopped on of the end of March. So right now we can observe that Canadian dollar futures should stay a bit longer around this area, and any single trial of an crossing throughout this 0.77 area should get us down to those 50-ish area back from November of 2020. So that's it for Canadian dollar futures. Right now this currency and economy looks quite stable with increasing oil prices, but as we can find with oil peaking, we can observe that Canadian dollar futures may go through some downturn move in the future.